This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome back to LendIt Fintech's Weekly News Roundup. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and I'm joined today, as always, by Todd Anderson. How are you doing, Todd?
I am good, Peter. How are you?
Doing great. And our special guest today, Kabir Kumar from Flourish. How are you doing, Kabir?
Doing great. Thanks for having me, guys.
Of course.
Good to have you back.
Yes, indeed. Well, like most weeks, we have a lot to get through today, so let's just jump right into it. Want to start off with the SEC, and this actually came out late last week. I think it was Friday afternoon, and wanted to touch on it because it is, you know, in some ways it's not news at all. In some ways it's big news because Van Eck. I'm talking about Van Eck, the ETF that they put the Bitcoin ETF. This was not a futures ETF, but actually holding Bitcoin, rejected once again by the SEC, and it wasn't super surprising. I think people were hoping that maybe the fact that they approved a Bitcoin futures meant that they were getting closer, but they're still worried about fraud. They still say that there's price manipulation potential, and so we're back to square one in some ways, although there's many others. It's seen many other Bitcoin ETFs that are still in the works and before the SEC, and I'm sure Van Eck will probably go again. They've been rejected multiple times, and they'll probably go again. But anyway, any thoughts, guys?
I think we talked about it a little bit at the time when they approved the futures one. I thought that's set back the spot ETF by months, if not a year, because they said, all right, basically they'll let them work with the futures ETF for a time being and see how that works out to really collect data to better understand Bitcoin. Though I think it's all a facade. I think it's they are going with the mantra of being adversarial to crypto at the moment. And I think it's very, very, unfortunate because, the one thing the crypto market needs is clarity on how they can operate. And they're continuing to drop them into the bucket of in limbo. All right, we'll give you a futures ETF, but a spot ETF, not yet. We'll give you this over here, but this over here, not yet. And so it just leaves them in this strange limbo, and it's hard for the industry to really take that huge step forward until they get true clarity.
Yep.
I think that if you look at it from the regulators, dare I say, from the regulators' perspective or the SEC's perspective, I mean, it is ultimately why you're okay with futures, not okay with spot, is because it's about consumer protection, right? It's harder to get comfortable that consumers won't face direct risks from the spot ETFs. It's harder. Mm-hmm. And so I think that's the fundamental issue. And I don't think there's a good answer for that. So I think it's going to take a while. It's going to be over a year at least before we get comfortable with those spot ETFs. And I feel this is the biggest story, right? The biggest story here is how do we regulate this space? I actually think we might even need sort of a completely new structure, some interagency regulatory group or supervisory group, something just that doesn't exist now,
right,
for this needle to move forward. But I think it's consumer protection that's really at the heart of this.
Yeah, and that's what Coinbase has actually put forward, that they want some sort of new structure. And you go to the Twitterverse, and of course they say yes. They first rejected a Bitcoin ETF back in 2013. And if they had accepted it, consumers would have the protection that they gave consumers has cost consumers a great deal. But obviously, they were not, the the SEC is going to move slowly here, and as you say, it could be some time. But anyway, let's move on. N26. This just came out today. We knew that they were looking at closing down the US operation. There's been sort of little bits and pieces that have come out about this over the last month, but today it's official. Shutting it down January. They're closing down all 500,000 accounts are going to be shut down. All the employees are going to be either deployed elsewhere or let go. And so N26, who started with such promise back in, they launched, I think, in 2019, and they'd been in the, we've had them speak at our event multiple times, even before that. They've been in the US for many years, and they've decided it's just too hard.
I mean, they acquired, I think it said in one of the stories, 400,000 users relatively quickly.
Yeah. Well, 500,000 total is what they're saying.
Where they ended up with, yeah.
But, it just, the U.S. is a really, really tough market to crack. N26 also left the UK. And so they've while they recently raised a round, they did say in that round that they're putting all their focus into Europe, though they still have I think an application for a banking license or something in Brazil. So that's I guess one thing to watch for. But we haven't seen Revolut take off in the U.S. either, and so the U.S. is made up of 10,000+ banks, credit unions, financial services companies that service consumers or small businesses. I mean, that's a heavy market to jump into. Depending on your size, you can get a lot of interchange revenue. You can get a lot less if you're significantly larger. But the one thing I think N26 and Revolut suffer from is that there's no real hook into why they're so much different than maybe a Chime or a Wealthfront or one of these other firms that's already had their story here in the U.S. And have acquired customers and are U.S. based.
Yeah, we were talking about this earlier. There's definitely a specific to N26 story here, right? They are under some scrutiny from regulators. They had challenges during the pandemic, had to let go percentage of their staff, etc. They're specific to N26 stories. But to your point, Todd, there's sort of a broader implications for what does it mean for the European challenger banks and their ability to survive in the US context. And I definitely think that the way they originate in the US, right, the way they in the European context, the way they get started is very different than here. And so I think structurally you are facing caps in the European context. You're not thinking that it's a prepaid-led model, it's a transaction-led model. You're thinking earlier about credit. That's not the reality here. And then on top of that, I think the digital banking space, by the time came in here and got started, got a lot more sophisticated, got a lot more variegated with Varo, Chime, Marcus, allies of the world going digital and mobile first. It just got a lot more complex for them.
Mm-hmm. Yeah. I also think the other part of it, and I was reading this, I think 2 days ago, maybe in the Financial Times, the European brick and mortar type banks that came here have suffered almost a similar fate. They've sold off their U.S. based assets. I think there's in Bank of the West, I think is associated with one of the European banks, is now up for sale as well. And so it's not just the digital banks. There's the traditional lenders have also not been able to have staying power in the U.S. market.
Yeah. Yeah, you're talking about BBVA for Bank of the West and HSBC. HSBC have divested many of their branches. So let's move on, though. I want to talk about Upgrade. We saw they raised a big Series E back in June. We thought, no one can raise money like Renaud Laplanche, and little do we know that just 4 or 5 months later, he's got a $280 million Series F, and that's basically jumped the valuation from like $3.5 billion to what is it now, 6.3 billion. And they said that, like in the article, it says that the revenue climbed 70% monthly revenue has climbed 70%. Their valuations climbed 83%. So, it's not that far off. The upgrade card, which is their core product now. I mean, they started off with just consumer installment loans, where they really focus on their card, the fastest growing credit card in the country, apparently. So, Renaud Laplanche continues to execute well.
Absolutely. I mean, I think what's exciting about Upgrade is that it's targeted. I think this is a Cross River Bank partnership, if I'm not mistaken. I think they built the product on Cross River.
Yep.
And they've targeted, the sort of fair to challenge credit score customers. I think 680 and below FICO, something like that, and up to 50K. So that is a huge market. That's a hungry market that has not been well served with sort of fast moving, smart decisioning credit products. So there was a market for the taking in a way. And in fact, you had a lot of really bad credit, right, being delivered in that market. So I think in that sense, it's more a reflection of also just finding the right market niche. I'm not saying it's not an execution story, but it's also the market opportunity story for sure. The big question I have is, and this is a broader reflection of what's going on in the BNPL space, right? This is in part a subset of that. Is how, these guys are not reporting to the credit bureaus, as far as I know. And then when stuff does get reported to the credit bureaus, is in a very different way, because each time you have an installment product, it's a separate lending account,
right,
that's getting reported. So I think that's a bigger structural issue. And there were a number of really interesting pieces, I think, in the last couple of weeks saying, now that the market is so massive, we need to structurally relook at how we report to the bureaus, because I think that could end up being really unfair for consumers. But exciting story, I think, in terms of the credit space on the whole.
Yeah, I mean, certainly the BNPL angle, there needs to be uniformity in how they report and what they report.
Well, some don't even report.
Yeah,
some don't report. Yeah, exactly.
Some report only bad or missed payment, so they're not giving you credit for 50 that you've made, but then you've missed one or two, and so it tips the balance negatively pretty quickly. But I think back to Renaud, I think the one thing that he's always been exceptionally good at is the products are always pretty simple.
Mm-hmm.
Even the upgrade card, it's very simple. There's not a ton of this jargon that goes along with how the rate is, and everything's usually pretty straightforward. Here's a product, here's the rate, here's your fee, done. Like it's very much straightforward. There's not all this tiny text that goes along with the upgrade card. So I think he's always been able to give you a simple, really efficient product. And like Peter said, I mean, he's never had problem raising money.
Yeah. But do you guys think this would be the same story if this was 2019?
Oh, God, no.
Exactly. So, and I think this post-pandemic moment, what the pandemic has done, everything that's going on with consumer practices is definitely a big part of this, right?
Yeah. So, it's lifted all boats in fintech. I mean,
yes,
for the most part. It really.
I think it's crazy though. We're seeing this more often. They raise, and then 5 months later, they're jumping like a insane amount. Not only valuation, but I mean, they're just stocking their coffers with cash. I mean, we've probably seen that 5 or 6 times in the last 2 months, where someone's raised within 6 months, maybe they've raised another giant round.
Yeah. Yes, and I think look, that's the big headline, right? Like even in our portfolio, our 5-year thesis just got shortened to 18 months. That's basically what's happening. And I mean, it's exciting, but that's what's happening. And the consumer behavior is now very visible, very understandable on this front than it was before.
Yeah, it is. It's very different times that we live in. We don't know when the music's going to stop, but we need to make hay while the sun shines, to use
exactly.
Anyway, I want to talk about the UK, because this is a really interesting development that Amazon in the UK is banning UK issued Visa cards from its platform. So from January, I think it's January 19th, you will not be able to pay with a UK issued Visa card. You can pay with a foreign issued Visa card. You can pay with a Visa debit card. Just not with a Visa credit card. And not only that, Amazon is paying. They're offering £20 for users who have a Visa credit card on file to switch to a different credit card. So they really don't want Visa to be getting any of this interchange revenue that I'm sure. I mean, they've got to be one of Visa's biggest customers in the UK, and I'm sure it's they keep increasing their prices, and Amazon have called their bluff and said, okay, forget it, we don't need you.
This is something I think we talked about a bunch on last week's show too. I mean, the payments battle going on right now is, to me, I think one of the more fascinating battles, because you have Apple, Square, Amazon, they're all kind of trying to create their own payments ecosystems as well that don't rely on Visa, MasterCard. And you have buy now, pay later, which take away the revenue as well. And so it's like this battle of, you had these two dominant rails that most payments occurred on and still occur on. And then you have this other battle of contactless payments, BNPL. And it just shows that, right now there's a pretty big battle for not only the interchange revenue, but also dropping fees and what ecosystem, quote unquote, is the best to kind of stay within.
Yeah, and we often talk about platform power, but it's great to see it work in this instance when they're like, hey, this is too expensive for our merchants. You're out. Yeah, and in fact, right, Visa and MasterCard were going to increase merchant rates last year
in this country. Yes,
yeah, going to. And the pandemic meant that they had to postpone it, thankfully, on that front. And I understand that in a couple of other markets, Amazon has also offered gift cards and all sorts of things to switch people over from it. I agree with you, Todd. I think what I was thinking about is, you have on the credit side the new BNPL rails, right? And a lot has been written about it. I think we're understanding how that's supplanting the credit rails. It's becoming more and more clear. But on the debit side, I think it's the open banking, right? It's like the freedom from accounts, basically. Right. It's like you can move money out of and into any account if that architecture exists. I think that's the evolution of the debit rails. No wonder Visa was interested in Plaid, right? Because that's the evolution of the debit rail. So I think you have both pieces pressuring the traditional duopoly of Visa and MasterCard. And I think that's very exciting to see how that evolves, because for a long time, it felt like you could never supplant the network effects that these guys had created. It just seemed very difficult.
Right. I think that's really, they're getting at it from all sides. I mean, because you got Venmo here. I did a deal with Amazon recently. And open banking is really pretty advanced in the UK, and you're paying with a bank account is pretty, and it's more well established in the UK than it is here. So consumers have, Visa are arguing you're limiting choice. Well, they are limiting choice to some extent, but there is so much more choice than there ever was before.
Absolutely.
Yeah, I mean, it's now commonplace here in New York, at least, to see the sign at the register when you walk into a place. It's 3% more if you pay with a card.
Exactly.
So pay with cash and we'll give it to you for cheaper. Exactly. And it's, I would think that it has an effect where a lot more people are paying with cash than probably, they were a couple of years ago.
Yeah. Well, that pushback on the credit rails has existed in emerging markets. Wherever you went in emerging markets, you would see that.
Yeah.
So this is long in the making. We just didn't have alternate structures and architectures in place.
Right. Yeah. Okay, let's move on. Want to talk about Opportune, who this week announced that they are purchasing Digit. Digit has been the popular savings app that have been around for many years. They they're also Digit is in the process of becoming a neobank. They have 600,000 customers who have saved a collective $7 billion since inception. That's not too bad. Price is around 213 million, which seems pretty reasonable for 600,000 customers these days. They both use MetaBank, and I think I read on Twitter earlier this week that Joanne Barefoot was one of the conduits for this deal. She's on the board, I think, of both companies. So anyway, it just looked like another M&A deal in the fintech world.
Yeah, I work closely with Joanne, and in fact, I was talking to her last night, and this is at a conference that she hosts, where she connected the two of them, going back a few years. Mm-hmm. She's on the board of Opportune. I don't think on board of Digit.
Okay.
And I think this is a super exciting deal, frankly. I think it's a good thing because Opportune is sort of seen the white knight of the lending business, the good guys of business. And Digit is seen as, if I don't know if this is really a deal for the 600,000 customers or more for the sort of the semi pre-machine learning engine that Digit has built, and I think over time it has trained on these customers, and sort of the saving numbers are a first proof point of that. And so I think that's what they really acquired here, and it's sort of an evolution of Opportune becoming a truly competitive, solid, all digital player in the market. And I think that's kind of exciting. I suspect they will go back. If you remember, they pulled their banking application. Yep. I think they will probably go back now for that next year or soon.
It's certainly a big win for that customer segment that Opportune serves. And I think they've given access to people who did not have access, and so I think this just expands that offering. And I think they've shown themselves to be one of the better players, and
for sure,
especially on the financial inclusion and wellness side, that's always been their mission. You have other companies that it's more the talking point. That's always kind of been their
that's been their ethos.
Yep.
That's how they see the world, and Digit is the same way. So I think in that sense, it's like a great coming together. So I'm actually very excited about this development. Yeah, somewhat surprised, but very exciting.
Yeah, because Opportune, I mean, I always thought of Opportune as like really focusing on the Hispanic market. That's kind of where they got their start. But this really broadens it out, certainly in my mind anyway, how they're doing it. But anyway, let's move on to more news from the SEC. More bad news for crypto. BlockFi has basically we saw that SEC is looking at whether BlockFi, whether their main product, their yield account, full disclosure, I am a customer, is a security and whether it should be registered. BlockFi have not been accused of any wrongdoing, but the SEC is joining several states that are also looking this year at the state of New Jersey that has been that started over the summer looking at it. Kentucky, Alabama, Vermont are also looking at BlockFi's offering. Eventually we're going to have to. They just need to rule: is it a security or is it not a security? Because I feel like BlockFi have been sort of in this regulatory purgatory in some ways because they don't know. Everyone's just saying we're investigating, and they haven't really had any clarity. So hopefully this will come to a head and there will be clarity eventually.
And also it gives this impression that some of these companies are operating outside the bounds, when in reality they want the clarity, so they know exactly what they can and cannot do. And right now, it's like they're eager to talk to regulators a lot. There's obviously some that aren't, but there's so many that are eager to talk to regulators, and they want to work with them and come up with a structure. And so they go, all right, this is it. This is what we can offer. Here's the limit to where we can go. And yet they're being investigated. There's nothing that they've been accused of. And so it's like there's all this innuendo going around when in reality it's just, let's rule. It is or it isn't.
Well,
Yeah. Well, I think in the regulatory culture in the US is let the markets run and then we'll come in. Right. Because in the rest of the world, it's like, here's the box. I define the box. Now you play in the box. Whereas the US is like, let's see what you come up with. What does it look like? And then we'll jump in and look at this. I think this is good news in the sense that this is an important layer that has been built, because you're now starting to see this next generation set of startups that are saying, hey, how do I get access to these yields? How do I bring these yields to the everyday checking account holder, everyday savings account holder who doesn't want to touch crypto right now, right? They're building on top of these guys, on top of BlockFi and others. So I think getting clarity and sort of figuring this out is going to unleash that other innovation market that's emerging right now. And that's kind of exciting.
Right. It is. And I think, the thing that's crazy is that there's so many DeFi projects out there that you can get yield better than you get yield at BlockFi. BlockFi is a centralized play. They control their ecosystem centrally, whereas all these DeFi projects, same product basically, but decentralized. And I feel like the SEC is. I think it's probably it's good news for BlockFi if they can get clarity, and I think that's what we're looking at. But where does that leave all the DeFi projects? If BlockFi has
terrified.
Yeah, exactly. Right. That's a whole nother topic though. Let's move on. I want to talk about Plaid. They had a new report out called the Fintech Effect. They surveyed 2,000 adults in the US and the UK, and they were looking at the impact of fintech. Now, they defined fintech as any digitally delivered financial service, so it is pretty broad, but they found that basically 88% of US consumers were using fintech, 88% of the entire population. It's up from 58% just I think a couple of years ago, or last year actually. 48% of people use it every day. That's 48% of the entire US population using fintech every day. No wonder there's all this money being thrown at the industry.
I think the more interesting number would be in like 2 years, how much that 88% is, holding strong or holding steady. Some of this is pandemic induced, but I think the awareness factor of digital, delivery of financial services is as high as that we'll probably ever get it in terms of everything being shut down. I think it's incumbent upon not only fintechs but banks to keep that momentum going, keep innovating, keep delivering products that are seamless, keep making processes digital, and figure out the in-person additive to that, but not revert back.
Well, it's reasonable to ask what we are seeing now, will it stay? Because what's behind this is this exogenous thing that happened, the pandemic, right? That's part of the driving force. It wasn't this organic, natural growth. So it's reasonable to say, are we going to snap back to that pre-pandemic world, or is this going to continue? I'm quite confident we're not going to snap back. And I think there's a little data point in this report that supports that, which is boomers showed the highest growth in fintech adoption over the past year at 40%, right? Those kinds of things tell you, okay, there's a more structural shift taking place. With the millennials and with Gen Z, we know that they are leaning towards these kinds of products, and there's strong evidence on that front. But on the boomer side, it's a switching question. And so I think that's very exciting. By the way, none of this necessarily mean people are financially healthy, right? That's separate.
Right.
This is the fintech, I'm using tech. That doesn't necessarily mean I'm financially healthy, and that still remains a challenge.
But they did say I can't remember the number. It was 90-something% of people appreciate the fact that it saves them time.
Yes,
so they are doing.
They're on the path of
Yes, exactly. Anyway, we're almost out of time. So one more story. This is a fun one. I don't know if you've been seeing the ads. Crypto.com. They've got Matt Damon doing ads all the time. It feels like to me. They are taking over the home of the Los Angeles Lakers.
And
They-
Clippers.
And Clippers, yes, of course, and Clippers. The Lakers, really. And I think there's actually, isn't there a hockey? Don't they have a hockey team? I think as well.
They have a hockey
Kings?
team.
Yep.
Exactly.
Yes.
There's
So
some
that's
Canadian team too, right? Or something.
Yes.
Like
So
that.
it's not going to be the Staples Center anymore. It's going to be the Crypto.com Center, or no, Crypto.com Stadium. I can't remember what they were calling it, but it's Crypto.com something, and it's $700 million for 20 years. Makes SoFi's deal look like a bargain. $400 million for 20 years at the SoFi Stadium just down the road from the new Crypto.com Center. Christmas Day, the Lakers always play on Christmas Day. They're now going to be playing in the Crypto.com arena.
Yeah, you got a crypto named arena in Miami. You also have Lone Depot Park, which is where the Marlins play in Miami. So, I mean, I think the SoFi deal shows that it could certainly pay off when every week they talk about the Super Bowls at SoFi, And, if the Lakers make the finals, it'll be game 1 at Crypto.com arena, game 2 at Crypto.com arena. I mean, it does have an impact. How much does it really help them? I don't know, but awareness wise, I don't think it can do anything but help.
Yeah.
Well, I had no idea who these guys were. I have to say, I was like, who are these guys based in Singapore running a Malta operation? Suddenly it's at Staples Center, and it makes you wonder what they're paying Matt Damon, for these.
I'm sure he's not cheap.
Exactly. So yeah, it's quite. It fits the week. It fits the moment, right?
It does. It really does.
So this is the future is here. Deal with it.
Yep, and we got lots of money.
I'm sure when they're not around in 4 years, they'll just change the name to. No, I'm kidding. Crypto.com.
No, relax.
Anyway, we are out of time for this week. Thank you, everybody, for tuning in. Thank you, Kabir. Thank you, Todd. And before we go, just one quick announcement. In less than 3 weeks now, we are going to be in Miami. We'll be actually doing this show, I think, live from Miami for the LendIt Fintech LATAM. The Latin American community is all going to be converging in Miami in person. We're actually on track for a really great show in person, and check it out, LendIt.com. And if you are even moderately interested in the Latin American fintech community, you should come.
The hottest market in the world.
Yep, indeed. Okay.
Thanks, Kabir.
All right,
Good to see
thanks,
you.
guys. See you.
Yeah,
Bye.
see ya.